Just observe that we do have a quorum in the room, so I would ask the members who haven't been seated to go ahead and take their seats as soon as they can. And at this point, I would ask the clerk to open the roll for attendance. Can Senator Dance, is there someone get her button? Okay. Clerk, close the roll. Thank you, Mr. Clerk. Okay, good morning, everyone. We have, this morning, we're going to quickly get down to business. We've got information sharing from our new Secretary of Finance and from the State Tax Commissioner, who are here to share information that will be very valuable to our deliberations. But we also have a significant number of bills that we thought that would be good to go ahead and move today. And what we're going to do first is try to address a handful of bills from non-members that are here so that they can get on back to their work. So I will take a look at that list here and see who we have. Okay. It's been called to my attention that we have one member that would desire to strike their bill. That's Senate Bill 132, Cosgrove. Do I hear a motion to strike that bill? So moved. Okay. At the request of the patron, motion properly supported to strike Senate Bill 132. The clerk will open the roll. All those in favor of striking the bill signify by recording your yea. And
you got this electronic stuff down pretty well. Still trying to figure it out.
Okay. Ayes 13, no 0. The bill is stricken from the docket. Okay. Now, if I can determine, is my board going to tell me who's queued up first? Okay, good. Thank you. Senator Locke. Will they be in the way I should call them? Senator Locke, I think we've adjusted to our technology now, and we're ready to hear your bill.
Thank you.
Which is Senate Bill 115.
Thank you, Mr. Chairman. Senate Bill 115 amends is requesting to amend Section 58.1-3833 and 58.1-3842 of the Code of Virginia to allow counties to levy a food and beverage tax at a rate not to exceed 8% and by action of the governing body without a need for a voter referendum. This is being brought at the request of York County. And currently, the code authorizes counties to levy a tax on the purchase of all prepared and ready-to-eat food and beverages at a rate not to exceed 4%, and if approved, at a voter referendum. 5 counties, Arlington, Roanoke, Rockbridge, Frederick, and Montgomery, have been granted an exemption from the referendum requirement, so their governing bodies are trusted with the authority, but they still are subject to the 4% rate cap. Cities and towns are not subject to the referendum process or the 4% cap. All 38 Virginia cities assess a meals tax, the lowest rate being 4%, the highest 7.5%, and the medium being 6%. So York County is simply requesting that they be allowed to be trusted at the same weight that cities and towns are. And that's the request, Mr. President.
Okay. Thank you, Senator Locke. Members of the committee, you all have any reaction to that? I think we saw this bill last year. I would.
Chairman, I have the same bill, Senate Bill 527, if you'd like to roll mine, Senator Locke, sir.
Senate Bill 527. Okay. We have a request. Is there a motion that we roll Senate Bill 527 into Senate Bill 115? Was there a second? Okay, clerk, is this recorded?
Yes, sir.
Okay, clerk. Okay.
Yes, sir.
Okay. Clerk has opened the roll for voting. Please record your vote.
Ayes 12, noes 1.
Okay, the bills are rolled together. Now that we have the bills rolled together, Senator Locke, the what the pleasure of the committee is, but there are going to be a number of these types of bills dealing with local government taxes, and we're basically looking at that. I'm hoping that we're going to come up with a broad solution for that. Any member have any questions of Senator Locke? Is there a motion? Did you want to speak? I'm sorry. That's great.
Good morning, Mr. Chair and members. Katie Boyle with the Virginia Association of Counties. Just wanted to register our support for this legislation. Thank you very much.
All right, the Representative Vaco, anyone else desiring to speak in favor or in opposition to this bill? Okay, we do have a motion. Yes.
Mr. Chairman, members of the committee, Joe Wertz, Virginia Restaurant, Lodging, and Travel Association, we oppose this bill. Thanks.
Okay. We have a motion to report. Any further discussion? Has that been seconded? Yes. Motion properly supported. Any further discussion? Hearing none, the clerk will open the roll. All those in favor vote yea. All those opposed vote nay.
Yeas 4, nays 9.
Okay. Yeas 4, nays 9. The bill fails to report.
Thank you, Mr.
Thanks,
Chairman.
Senator Locke. As I indicated, we will be looking at this issue and hope to work with you on that.
Thank you.
Senator Peterson.
Good morning, Mr. Chair, members of the committee. This
Good morning.
is Senate Bill 139. This is a bill that I've brought, I think, at least the last 4 years. It's the plastic bag tax. And just a brief reminder, I have not changed the language one iota from at least the past year, but this only applies to localities in the Chesapeake Bay watershed. So if you're in the Shenandoah Valley, at least on the southern end, I don't think it would apply. But it might still apply to you, though, Senator Hanger. Bottom line is this takes every plastic bag except those which are specifically exempted, but typically the plastic bags that you get at grocery stores and convenience stores, and charges a nickel tax per bag, with 20% of that, or 1 penny of the nickel, to go back to the retailer for the cost of administering this program, and the rest of it to be donated to the Virginia Water Quality Improvement Fund. This is a tax and a program that's been tried in other localities, and in other states, been successful. I know North Carolina has a similar program. D.C. and Maryland have similar programs. Typically, they've done it on a locality-by-locality basis. I think it's easier to just do it on a watershed-by-watershed basis, just because, frankly, I have businesses in Fairfax City, Fairfax County. It's just easier for folks to understand if you have one law in place. I have a number of witnesses that have come down and would like to testify, and I would yield my time to them.
It's okay. Thank you, Senator Peterson. We're pleased to hear briefly from your witnesses.
Mr. Chairman, members of the committee, my name is Bob Shippey. I am a member of the Sierra Club in Virginia, and appreciate your time today. I think this is a very common sense, market-based solution to a large and growing problem that we have with litter that ends up in our waterways. Plastic bags are a very high percentage of that, as you probably know. This has been successful in other locations, including nearby D.C. and Maryland. Sierra Club fully supports this bill. Thank you.
Okay, thank you. Additional speakers?
Hi, I'm Julie Kimmel, 350 Fairfax, and we absolutely support this bill. I had prepared comments, but I don't think we have time for them, so thank you.
Well, we're here to listen to you, but we appreciate you being brief.
All right.
Unless you're going to read along.
We want this 5-cent fee because plastic bags pollute our woods and waterways, creeks, streams, and rivers that are tributaries to the Chesapeake Bay. They leak toxins into the groundwater, they poison our food chain, they never degrade, and on top of that, they are made with oil and fracked gas that are responsible for greenhouse gas emissions that are warming our planet. And we want to see our bay, our waterways, our woods, and our planet remain healthy and vibrant for our kids and grandkids. I also wanted to talk about some positive economic implications for this for a single-use plastic bag fee. It's pro-community. The presence of litter in neighborhoods indicates neglect and can lead to crime. So reducing a major source of litter in our communities via plastic bag tax would actually potentially reduce crime and increase property values. It's also pro-consumer. Retailers pay a lot of money to purchase single-use bags that they then give away for free. If retailers are saving money by buying and distributing fewer plastic bags, they will pass those savings on to their customers. And third, a plastic bag fee is pro-business. Retailers would not have to spend as much money buying single-use bags. And 1 cent, like Senator Peterson said, would go back to them, which is an additional revenue source that could potentially be beneficial for small businesses. And finally, they're pro-jobs. SB 139 directs that revenues from the tax be used to support the Chesapeake Bay Watershed Implementation Plan. This means new government and civilian jobs for people charged with monitoring and maintaining the Chesapeake Bay. Plus, a cleaner bay would certainly lead to growth in fishing, tourism, recreation, and shipping industries throughout the watershed. So, pro-community, pro-consumer, pro-business, pro-jobs, please support this bill. Thank you.
Very much. I appreciate you sharing that. Any additional speakers?
My name is Philip Latassa. I represent the Friends of Acatink Creek in Fairfax County. Friends of Acatink Creek urge your support for Senate Bill 139 to control the sale of disposable plastic bags. We strongly endorse and support efforts like this to reduce trash in local watersheds. As Virginia legislators, we encourage you to support the work of your many constituents who participate in stream cleanups by voting for SB 139. Each year, the Friends of Acatink Creek and other civic groups mobilize volunteers who clean tons of plastic bags and containers, as well as other trash and debris, from streams that feed into the Chesapeake Bay. Across the United States, millions of tons of plastic waste is washed from streets into waterways, fouling waters for both marine life and human usage. Reducing consumer consumption of plastic bags by means of collecting a portion of the cost imposed on the Commonwealth is an effective way to reduce the amount of plastic trash that enters our watersheds and flows downstream to the Chesapeake Bay. Besides being an eyesore and a burden to remove, this noxious litter refuses to go away, only breaking down into toxic particles that will be with us forever. Please support SB 139. Thank you.
Thank you very much. Okay, we've got one additional person then, or in favor?
Good morning. I'll be quick. My name is Helene Shore. I'm here to represent not only 350 Fairfax, but a group of volunteers that started in 2009, collecting donated fabric and sewing them one by one to give away for free if people would use them instead of single-use plastic. And since then, we've given away 2,800 bags. I'm here to support SB 139. It is a market-based focus on reducing the amount of trash that pollutes Virginia neighborhoods, foreign lands, and waterways, and supports funds dedicated to the cleanup and restoration of Chesapeake Bay. It creates a partnership between business and environmental leaders to develop a shared strategy to reduce the amount of trash in the Chesapeake Bay and its tributaries. Reduced litter reduces litter cleanup costs to counties and state departments. The effects of attacks on single-use carry-out bags has been proven in D.C., Montgomery County, New York City, and other locations both nationally and around the world. I urge you to support this bill. Thank you.
Thank you. Okay. Senator Peterson, is that?
I think that wraps up. I'll just summarize by saying I know there's going to be some opponents.
Right.
My first job back in the 1970s was picking up articles of trash in the Acatink Creek. My mom and dad used to pay me 1 penny for each item. Bottles, cans, not a big deal. I remember trying to pick up those bags. It was a mess. Mm-hmm. And so
okay.
I urge you to pass this bill.
Okay, I think we do have a couple of people that may want to speak in opposition. With the, if y'all would come forward briefly.
Hello, thank you, Mr. Chairman. I'm Katrina Jones with the Virginia Retail Merchants Association, and we sympathize with their problem. However, taxing our customers, we don't think is a solution. And also, we find that the plastic bags are more sanitary because of things like meat juice and E. coli that may get on the register's belts and things like that. So when you're using the reusable material bags, those are not as sanitary as plastic bags. So we don't recommend forcing our customers to go in that route. And then also in Winchester, Virginia, we have one of the largest plastic bag recyclers that makes parts for fences and decks. They're a very large company. They do a great job, and they take the plastic bags and reuse them. And also customers use the bags for pet waste, and they use them as trash bags. So they do reuse the bags. And we oppose the legislation.
Okay, thank you. All right. Next.
Mr. Chairman, members of the committee, Kate Baker on behalf of Virginia Retail Federation. We have a longstanding policy of opposing a tax on plastic bags and promote recycling of plastic bags.
Thank you. One more.
Oh,
There
I'm
we-
sorry.
Mr. Chairman, members of the committee, Joe Wertz, Virginia Restaurant Lodging and Travel Association, and we also oppose this legislation.
All right, thank you. Okay, Senator Peterson, you wrapped
Sure,
up?
and I appreciate those kind comments, which I expected. I would simply point out that under Section B2 of the bill, it talks about plastic bags which are exempted, including carrying fish, poultry, leftover restaurant food, newspapers, and other sanitary-type issues, so that would be exempted.
Okay. Members of the committee, Senate Bill 139
Mr.
is in
Chairman?
front of it. Yes.
One
Senator
question
McDougal?
for Senator Peterson.
Yes, sir.
Senator Peterson, if I'm not mistaken, a couple years ago, California prohibited plastic bags, and my understanding that the amount of plastic in the landfills increased 19 to 20% the year after. Do you have any information about whether if we would do this, that it actually would increase the amount of plastics we're putting into the landfills? It might help the tributaries, but the landfill implications?
Well, first of all, it's not a prohibition. It would significantly lessen the amount of plastic in the waste stream. In terms of how California puts it in the landfill as opposed to recycling it, I have no idea what they do. You know, I like the recycling program, but I still think the majority of plastic still goes into a waste source eventually. But
Okay. Any further questions or comments? All right, the bill is in front of us. What's the pleasure of the committee?
Move to report.
Motion properly supported to report. Any further discussion? Hearing none, clerk open the roll. Record your votes. Okay, record your votes.
Yeas, ayes 4, nays 11.
Ayes 4, nays 11. The bill fails to report.
thank you, Mr.
Senator
Chair.
Peterson, I know you've worked on this for some time. I understand there's another bill coming through, maybe Senator Lewis, that's aimed at recycling. So you might want to look at that to see whether.
I've seen it. I think
Have
that's
you?
in another committee, too.
Okay. All right. Thank you, Senator Peterson, and those who came in support of the bill. All right, Senator Wexton.
Good morning, Mr. Chairman. I have Senate Bill 430.
Senate Bill 430. Okay. Maybe we can change the tone of this committee here now. Give us something good.
I certainly hope so, Mr. Chairman. This is truly a cleanup bill. This is a bill to remove an extraneous reference to deferral in a provision relating to real property tax exemption. Currently, 58.13219.5 exempts real property taxes for 100% disabled veterans and their surviving spouses. The commissioners of the Revenue Association brought it to the attention of the Department of Veterans Services, however, that there's one part of this statute which refers to a deferral rather than an outright exemption, and they want to make sure that that language is removed so that no commissioners of the revenue, there's no confusion, and that in no instance would there be a deferral rather than an outright exemption on those taxes. There are, I believe, I know that at least one of my witnesses from the Department of Veterans Services has been felled by the flu, but I think there are a couple of witnesses here in favor of this
Okay.
legislation.
We might, if we could just have a clarification from a speaker in support of this, and then we may go no further than that if there's no one here to oppose it.
Mr. Chairman, Steve Combs, Deputy Commissioner, Department of Veteran Services. Happy to provide any clarifying information that you or the committee would need.
Okay.
But as the good senator stated, this is a cleanup bill. It removes the word deferral, and what it does is sets up that real estate taxes are exempted, so you don't build up a deferred that could build up for any number of years, and then a surviving beneficiary could be hit with a bill for 20, 30 years of back taxes all at once.
Right. Okay. Okay. I guess someone from the commissioners want to speak?
Mr. Chairman, I'm Charlie Croson, representing the Commissioner of Revenues, and we do support the legislation.
Okay, thank you. Is anyone here to speak in opposition to the bill? Okay, what's the pleasure of the committee? All right, motion properly supported to report the bill. That is Senate Bill 430. Clerk, open the roll, please. Record your votes.
Yeas 15, nays none.
The bill is reported.
Thank you, Mr. Chairman.
Thank you, Senator Wexton. Senator Chafin, you here? Okay, Senator Mason.
Thank you, Mr. Chairman. Let's keep that momentum going. I like that. Mr. Chairman, I spoke to a group of Commissioner Revenues over the course of the year, and they suggested to me they used to have an accelerated tax return program that they thought was great for the consumer, great for their constituents, and they asked me to look into bringing it back. So that's the bill before you to allow that process again. Over the course of the last years, the numbers of returns filed this way has diminished greatly. So I acknowledge that. It had gone from about 200,000 down to 55. Some of that might have been because of the administrative caps that the department had put on it. If you had a swing in your tax return of more than $600 from the previous year, you couldn't do it. They moved that to $300. If you're going to get more than $5,000 back, you couldn't do it. They moved that to $3,000. So some of that had the effect of diminishing the numbers, but electronic returns is really the answer there. So most are still filed electronically. Last year, about right at 800,000 were filed by paper. And this would just afford you the opportunity to work with your Commissioner of Revenue and file the accelerated return. I was surprised to learn at the number of commissioners that help with tax returns, a number of constituents, and they are elected officials, that come in and ask for their help. And so this would just afford them the opportunity to grant that help. There is one large community that suggests about 50% of their staff are working on tax returns around the course of that year. Now, you see a fiscal impact statement in your folder which has none, but that's the department telling you they're not too comfortable with it because of fraud reasons. And I come from a background in fraud and risk and fraud models, and these would not be able to be run through the fraud model as the electronic returns are done. So that is true, but we're limiting it to people that walk in personally to the Commissioner of the Revenue or mail it in to the Commissioner of the Revenue. So we're talking about the lower level returns. I spoke to you about the caps already. The department cannot tell us how much fraud came from these accelerated returns in the past. So that's something that I would suggest when we implement this new program, we keep an eye on and make sure, because they do a great job with their fraud models, caught $41 million worth of fraud last year. But again, most of it done electronically, trying to hit, and these are the lower level returns that probably wouldn't have that high risk.
Okay. Do you have anyone here to speak in favor of the measure? Anyone here?
I believe the commissioners might.
Mr. Chairman, I'm Charlie Croson speaking for the Commissioner of Revenues. We do respect the Department of Taxation and the good job they do. However, we feel that to reinstitute this program would greatly help the lower income individuals in the state, and we do support the bill.
Okay. All right. Thank you. All right. Yes. Commissioner, Department of Taxation here, if you could speak to this.
I'm not going to dispute anything that Senator Mason said. I would note that these are the only returns, all the other paper returns pass through our refund fraud models before a refund is issued. When we discontinued this program, all we wanted to do was maximize our ability to deny, to do a good review and analysis of every refund return before it's issued. We denied about 56,000 last year overall for $44 million. And when we met with staff, they said that this was one that they couldn't, because it doesn't go through our models, they couldn't guarantee that nothing hasn't happened or will in the future. So that was why we did it, and I'll leave it at that.
Okay, thank you.
Mr. Chairman?
Yes.
Just
Senator McDougall?
Before you walk away, can you tell us how long it takes to run these through the models, and what is the time difference that we're really talking if this program were in place for somebody to get a return versus if it goes through your model?
We'll do 90, if it's filed electronically, even when they go through all the model, I mean, we issue 99% electronically within 12 days. Significantly less than this. This is all electronic, goes through them really quickly if there are no issues.
Mr. Chairman. So,
Senator McDougall?
So if this program, if we were to support this and it became law, under this program, how long would it take to
The refund is issued, if it meets the parameters, the refund is issued instantly, or relatively instantly. And then when we get the return in from the local office, we'll run the return through our system. All the paper returns are run through. And if there are any adjustments to be made or issues with it, we would deal with it then. But it could be, depending on how long it takes the returns to come in from the locals, it could be a month or so, or longer.
Just clarification on that. If we don't do this, but they're filing it, how long would the refund how much difference in time? It wouldn't be the 30 days, would it?
No, if it comes in, if we get it in from the local office in a paper, if they package it up and get it to us, it goes to the head of the line. It could be 30 days, but that's usually toward the end when we get the big bulge around April 15th or May 1st. It'll be less than 30 days usually.
Okay. All right, thank you.
But it's not as fast as electronic, I acknowledge that.
Okay. All right, thank you. Other questions? Anyone else here to speak to the bill? What's the pleasure of the committee? There's a motion to report. Second. Further discussion?
That's not the hard part. Thank you.
Hearing none, clerk open the roll.
Roll is open.
Please record your votes.
Ayes 8, nays 1.
Thank you, Mr. Chairman.
Okay. Thank you. The bill is reported. Thank you, Senator Mason. Okay, I think we have Senator Peake, you're here.
Yes, sir.
And then, Mr. Secretary, we'll get right to you. Thank you.
Good morning, Mr. Chairman, members of the
Good morning.
committee. I'm here on Senate Bill 332, which is a bill to increase the limit, tax-free limit for small farmers, local farmers, independent and hobby farmers from $1,000 to $2,500. It would exempt their proceeds up to $2,500 from taxation. In the interest of full disclosure, Mr. Chairman, I have to tell you that I am a first-generation chicken farmer. I have a herd of approximately 6 chickens.
6 chickens?
To date, I have not generated any revenue, so I don't think this is going to affect me, but I think a lot of local farmers are interested in this. I think it increases the interest in hobby farms, and it also eliminates a lot of bookkeeping headache for them. And then if you look at the back, there's no administrative cost in the revenue impact from the commission. It goes from $1,000 to $49.99, but we're actually only asking to increase it to $2,500. And so the impact in revenue should be very minimal. And I do have someone here to speak on behalf of
Okay,
the
we'd be glad to hear briefly from them.
Good morning,
Morning.
Chairman, members of the committee. My name is Ann Buteau, and I live in rural Nelson County. I'm president of Virginia Independent Consumers and Farmers Association, which is a statewide group which promotes availability of locally produced food. I work with horses, and my husband is a carpenter, and we are part of a growing category of what we call homestead farmers. We raise some livestock and garden on a small scale. We sell to our friends to cover the costs of production and hopefully make some profit to go towards our daughters' school fees. Us and many others do not have economies of scale. We do not receive subsidies from the government, such as corn, tobacco, and apple farmers. They receive money through the Farm Bill. This bill, in conjunction with Senate Bill 675, which is the yogurt exemption bill, would allow us to improve our bottom line. It would really help a lot of families. The extra $1,500 might not make much difference in many people's pockets, but when you live in a rural area and there aren't many job opportunities, or you have to travel many miles, any little bit makes a difference. There are many people out there like me, but not many are crazy and passionate enough to drive 2 hours in the snow to come to Richmond. We hope you will vote yes for Senator Peake's bill. Thank you.
Okay. All right, is anyone here to speak in opposition to the bill? Nope, he's leaving the room. Okay.
Nothing further, Mr. Chairman.
All right, there's a motion to report. Is there a second? Any further discussion? Clerk, open the roll, please. Record your votes.
All right. Wow.
All right.
Ayes 15, no
Thank
0.
you.
Ayes 15, no 0. The bill is reported. Thank you, Senator Peake. Okay, we will now change directions a bit. We appreciate the Secretary of Finance indulging us to get non-members of the committee out of the way here and the Commissioner of the Department of Taxation. And we want to welcome our new Secretary of Finance here this morning. Appreciate you being here this morning. Obviously a familiar face to us, and we look forward to working with you over the next several years.
Thank you, Mr. Chairman and members of the committee. I will point out I am not Rick Brown, and I know you've been used to seeing him for many years. Certainly a great institution, a lot of knowledge, and what I hope to do is build on the great stewardship he's done and, to the best of my ability, continue to have that type of working relationship with you. I did want to mention a couple things. I do have a couple members of my staff that are here I'd like to introduce briefly. I first of all have Joe Flores, who's Deputy Secretary. Many are familiar to you. If you look at our general fund budget, obviously healthcare costs are a substantial part of that. Joe has experience in that, and he's going to be sort of heading up that side of the general fund budget. Also with me is the other Deputy Secretary, June Jennings, former Inspector General. June, if you look at also education costs, take a significant part of the general fund budget. June will be working primarily in there. I would also mention, because there is a change with the Secretary, all the other agency heads will remain in place. I thought that was very important, particularly in dealing with rating agencies and other constituents, to show that we have continuity. So at this time, they all remain in place, and look forward to working with this committee. Now, today I want to go through a few things. First of all, just to give you an update of revenues. And let me start before I get into the presentation and just read a quick excerpt from the last letter that former Secretary Brown wrote to you before he left office. The general fund revenue collections did rise 10% in December, primarily driven by non-withholding payments. And I'm going to spend a little bit of time on that as we go through the presentation. But on a fiscal year-to-date basis, that brought total revenue collections to 5.9% growth through the first half of the fiscal year, which is roughly 2.5 points higher than the 3.4% in our model or in our budgets. However, the timing of these non-withholding collections can distort growth in several sources, and you have to look at December and January collections together. And again, that is especially true in non-withholding. So I just want to give you the overall where we stand and then really get into some details. So, Mr. Chairman, what we'll do is go through a little bit of the national and state economic indicators to give you a flavor of where Virginia sits in the national. We'll do a little bit about our state, particularly in general, then the year-to-date revenue collections for the fiscal year, and then where we might go from here. If you look at the overall national and state economic indicators, they remain pretty much what from the last report. I won't go through all of these, but I will point out the second one, payroll employment in the nation rose by 148,000 jobs in December, and the prior month was revised up. The key here is that indicates that we're still in type A growth mode at the national level. And if you look down to the fourth item here, initial claims for unemployment rose by 3,000 to 250,000, but that still was an indicator we're in expansion mode. So I would point out that from the national, and I'll get into a little bit about what might happen in Congress in the next few days if we experience that, but in terms of economic indicators, we are entering one of the longest growth periods in our history, which is well over 100 months. I think if we go 17 more months, it'll be the longest in history. So we have to keep that into account as we look forward. Certainly, the monetary policy of the Federal Reserve, unwinding of their balance sheet, which was a stimulus when they did the monetary easing. We have to see what the impacts like that would be. Certainly, the increase in interest rates. The Federal Reserve has, again, acknowledged they will probably raise 3 times next year. So that could be an indication of some things that could spur the continuing movement of our national economy. If we go to the next slide, I want to point out here as it relates to the third bullet point in Virginia, our payroll unemployment was at 0.9% in November from a year ago. The good news is we do have relatively low unemployment at 3.7%, but I did want to point out that one area in particular, Hampton Roads, continues to lag the rest of the region in terms of its economic growth. A lot of that may have to do with the sequester. In fact, it's one of the few areas in the Commonwealth where we have not put back the jobs we lost during the Great Recession. Now, but other than that, again, pretty much where we reported last time what was going on in Virginia. Now, I'm going to talk a little bit more specifically about the Tax Cut and Jobs Act and how it impacts us. And I know Craig Burns is going to come up after me and go through specifics on how it impacts Virginia. But at this level, I would point out that it could potentially have a positive impact to our nation in terms of job creation, and in particular, business expenditure when it relates to capital-intensive industries because of the increased ability to expense items and take them for tax deduction. So we could see a benefit from that. Not a direct impact to us, but just an overall spurring of the economy, although I would point out to that it does increase the debt. So you have the national debt, it appears to, so you're going to have countervailing forces based on that. So anyway, there is a potential that it could continue this economic expansion in the short term. Now, I did want to mention quickly that as of midnight on Friday, unless there is an agreement in Congress, we could have a potential government shutdown, and that could be an issue potentially in the short term to Virginia. We're going through a protocol now. I'll have a meeting tomorrow where we'll be reaching out to all the agencies and looking at the type of cash reserves they have on hand. Some agencies like VDOT won't be specifically impacted immediately because they have a longer lead time in how they get revenues. Others like the CHIP program and some of our social services are probably going to be more impacted if we have that. But I did want to point out here that also could have reverberations for our economy if what comes out of that shutdown is a deal like the sequester. And remember, the last time we had a government shutdown, it was a sequester. If we don't do anything to remove that, that again would put a significant impact on the Virginia economy going forward. So it's not just the immediate shutdown to our agencies, but what might be the deal coming out of that could impact our revenue projections going forward. So just wanted to make that, point out that to the committee. Also let you know that we are on top and will issue instructions to the agencies if in fact we do have this shutdown, and obviously work closely with you on what the impacts might be to Virginia. Notwithstanding any of these extraneous issues, though, if you look at our general fund revenue collections, as I said, they're running well ahead of the forecast of 3.4%, almost 2.5 points. And of course, 10% in December, but it was primarily a result of non-withholding. And I'll get into the details. So it was not the normal payroll withholding. It was not our sales tax. It was non-withholding, and we think quite a bit of that had related to the federal tax reform. In fact, if you get into the specific items, if you look at withholding, we were down a little bit, but we expect to get that back in January because there was one less day. So I don't see anything in here, which you know, this makes up almost 2/3 of our budget on the general fund. I don't see anything, along with withholding, which we'll get into in a few minutes. I don't see anything here that would cause us to change our projection here. When we get the extra day back in January, I think you'll see this even out. So from a withholding perspective, we're about on course with where we were in the last time we reported. However, the non-withholding tax collections have a lot that we have to take into account. As I pointed out, we had a significant increase in the amount collected in December. And in fact, the increase in this December, the only thing that was comparable was the dot-com boom back in 1999. In 1999, we had a 138% increase in December for non-withholding of our state taxes. This year, it was 144%. So there was a substantial, obviously, something going on here, even greater than that period in 1999. And as you recall, in 1999, you could point to initial public offerings and generation of wealth that was generating this income that would require withholding. We're not quite sure that's the case with what we have here. Now, if you looked at the withholding, it was about the same amount of checks 110,000 checks this year versus last year. So you might say that just the average went up as people looking at their calculation of their taxes. But if you get into the details, there were 550 high net worth individuals that made an estimated payment this year versus in the previous year. Last year, only 150. From 45 million to 224 million. We had significant high net worth individuals. One, we had over $20 million of a high net worth individual prepaying state taxes in December. Now, the question is, was that generated as because of the wealth event, which required that? Or was that taking the deduction for state taxes, which may no longer be available to that individual? Or was that tax planning to say, I'll pay tax, I'll take a deduction at a higher rate, and when I get my refund, I'll get it at a lower tax rate, so the arbitrage on that. And whether or not that is actually going to be seen in reduction in payroll withholding or the withholding in January, or will we wait till May 1st to figure out that we really are going to have significant refunds coming? Yes.
Excuse me, Mr. Secretary. Senator
Yes.
Caswell.
In some cases, it was all of the above.
Yes, sir. It is. I believe that is true. In fact, I'll be honest with you. I looked at that from a personal filer, but I happen to be an alternative minimum tax, so it made no difference whether I did that or not. But I would suggest there are a lot of those that were not in that regard. Yeah, yes, sir. I did pay to find out. And here's the other point of that. There is a whole industry that's now, all our tax preparers are all looking at this, determining what is the best angles. Now, that's all to say, let's talk from our revenue collection. I'll address that now. I'll talk a little bit longer later about some of the things that Craig will get into more detail. But actually, as of yesterday, the 16th, was when the Virginia withholding payments were due. Now, those that filed electronically, we got those quickly, but those that put in the mail, and many of the higher net worth do put them in the mail. It takes us longer to get those in. We'll be getting those in through the rest of the month. And if they send it certified mail, it even takes longer because we have to go down and certify to get the receipt. So we're not going to really know much about this until the end of January, possibly the middle of February, and still we won't know until we get our tax returns what the final impact would be. So I mention that is because right now, we've got over $1 billion collected compared with $800 million in the same period last year withholding, which is driving this increase in the total revenues, and we don't know if that is sustainable. And in fact, we're not going to know if that is sustainable for, I would say, a few months. And we are looking at the other impacts and what that might be on our taxpayers, but in terms of revenue collection, I would urge caution. And in fact, that's would be the position of the administration, to think that we would use this in any calculation of presuming a reforecast, because we simply don't know the answer that's the final result of this.
Mr. Chairman?
Yes.
Senator Barker.
Quick question. Given the potential for some of these being people who made the payment in December, doing so because that put it into a year in which there was full deductibility of state taxes on the federal forms, do you think there's a risk that we may have situations where our refund payments made from basically February through May go up as some of those collect refunds in a different year?
Yeah, that is correct. I believe that is a risk in that regard, or whether their refunds are applied to the future income tax payments that may be withheld. I would suggest I shouldn't say gentleman because I don't know who it is, but the person who made the $20 million either had that's a lot of money, either had a real taxable event or was expecting to get it back relatively soon. And so we'll find out. Of course, you got to file your return to get that. And so if you paid in $20 million, it probably indicates you got a pretty complicated return. And you don't even get some of your data till for a month or so. So, but yes, sir, Senator Barker, I do believe that is a risk. How much of a risk, I don't know, but it is certainly a risk. I think the key here from a revenue perspective is that it is not a base on which we could presume that we're going to have increased revenues at this point in time. Now, moving on to the others, speaking of individual tax refunds, they're running about what we projected. We projected $287 million through December, and we got in roughly about $289 million. So they're on. The key here is that the extension filings now have sort of evened out. So we sort of know what the refunds will be, at least in terms of a normal year. Whether or not these payments in December actually increase, Senator, we'll have to wait and see on that. So for the net individual income tax, we're 4.8% for the same period against last year, against our annual estimate of 2.9. But as I pointed out, a lot of unanswered questions in that area. Now, the growth in sales tax collections, again, the forecast is about what we've seen in the past. They were mainly flat in November and December, and on a year-to-date basis, we're at 3.8%, which is ahead of the annual 3.0% growth. I will point out all the reports that I read about the Christmas selling season were good for retailers. We'll see if that is for brick and mortar or if that's how much of that is internet sales that are reported. But there is a potential here that maybe we get a nice surprise or a surprise to the upside based on the anecdotal reports. But those will be out later in the month. And I should mention here, since I mentioned internet sales, that it was a noteworthy event happened a few days ago when the U.S. Supreme Court accepted to review the case of South Dakota versus Wayfair remote sales tax. That is the case where sales tax is collected depending on the nexus or where the origin of the sale is. And of course, the way it was done, and the retailers have said if you weren't based here, you couldn't collect tax here. If you didn't have domicile here, the court case is going to hear that. That could have a significant impact on our tax collections if, in fact, the court rules that those are taxable events. But I guess their calendar, the Supreme Court has taken it up. So in the future, there could be a positive potential from that, but they probably won't issue that rule until sometime later in the fall. But I did want to say that the Supreme Court has taken that up.
Mr. Chairman.
Yes. Yes, Senator Wagner.
Yeah, it's been a pet project of mine over the last 7-8 years is to start to see everything we can do to collect sales taxes from these internet sales. And I know you can't get drilled down to specific how much certain folks are actually remitting back to the state. I understand that that's not information that we're privy to. But overall, have you seen an increase in sales tax collections from these internet providers of purchases?
I will refer to correct. I think generally, yes, because we've seen an increase. Whether we're getting 100% of them all, yeah, but certainly there's no doubt there is moving. I mean, we all know now Black Monday is a bigger event than Black Friday.
Yeah.
So in general, yes, have they increased, but are we getting them all, Senator? I can't tell you.
I mean, there's national trends of how much is bought
Yeah.
over the internet vis-a-vis stores. I'm just wondering if our sales tax collections from internet companies track parallel to that or not.
I can't say with certainty, but I would, last year the General Assembly passed a bill that declared if there's inventory in Virginia, that created nexus. And I don't know if the increase we've seen in sales tax since then is somewhat attributable to that, but that's a factor. So I think it's possible or maybe even likely, so.
Mr. Chairman, I just think it's important. I mean, given the trend and given the increase we've seen in internet sales, that, I don't know if the tax can provide us more information and drill down to it a little bit, see if it's parallel. Because it's kind of a frontier land, and I'm not sure, what audits or what can occur actually to try to determine, if we're collecting what we should be or not. But,
Yeah, we'll
It's
see.
certainly-
I'll get work with tax, Senator, to see if we can't respond to your specific question.
Thank you.
Okay, thank you, Senator Wagner. Okay.
Yes. Moving on after sales taxes, if you look at net corporate income tax collections here, I'd just point you down to the fourth bullet. It's a good news story. Our corporate income tax collections are up. The key point will be, is this sustainable and we go forward? And again, I think that gets back to tax planning and just how the reporting here. But we are trending positively here. On a year-to-date basis, collections of this for corporate income taxes are 22% ahead of their annual estimate of 5.7% growth. So good news there. Hopefully that'll be because our state-based companies are doing well, but we should know more of that over the next 6 months also. A couple of other type of taxes that we get. I'll just point out on the recordation tax, they were down. But I would point out the spring selling season is very important to that, so we really won't know where we stand here until we get through the spring. We certainly know we had some weather events in the fall. I know once, so we'll see if this picks back up. It's just slightly behind, but we'll know that once we get through the spring selling season. And then on the insurance collections, something dear to my heart as being the former Secretary of Transportation, we have made the required amount payable to the Transportation Trust Fund of $168 million, and over and above, $94 million has been returned to the general fund this year. So that is moving about with what we expected. What this means overall is the fact that we are ahead of our collections, but I've highlighted in yellow the non-withholding because that's really what is driving these collections up. But if you come across the last two columns, if everything were to stand as where we were today, we only need to grow 1.2% overall for the remainder of the year to make our budget, our forecast budget, and last year we grew at 3.3. So from an overall perspective, we're in good shape, but it is significantly influenced by that, what I believe is an aberration of non-withholding that was collected in December. Now, based on this, we don't see anything at this point in time that would generate a reforecast during the session here going forward. That's where we stand now. We'll continue to work with you on that. But based on when you take non-withholding out, it looks like we've got positive and negatives going, and as of right now, would not be looking at a reforecast. In fact, if you look at the next slide here, I just call you over to the November-December category, actually December. This is just a look at our percentage of collections on a historical basis, how much we've put in the till or our deposit now versus what we end up collecting. The good news is we're at 47.4% versus an average of 47%. If you look historically, that would imply about $60 to $80 million of increase, not where we stand today. Remember, every $100 million is about 190, or one basis point, about 193 million. So we're about 500 million right now as we sit. But if you look historically, if things smooth out, it doesn't look as if that's going to be the amount. And again, with the withholding, that's back to where our position is now. Nothing would signify we should reforecast. And if we did, particularly not including non-withholding. Now, where does that leave us on the next steps? Look, January receipts will serve as a critical data point. Certainly withholding, the monthly and quarterly filers are due. And there's an additional deposit day, so we'll make sure we got that money back. I've talked to you about non-withholding. We'll have a clear assessment, and I really believe it's going to be May when we see the taxes that are actually due before we really have a handle on that. Sales, we'll see January receipts, and hopefully the Christmas selling season was good. And we'll try to answer Senator Wagner's question about the internet taxes there on sales tax. And then corporate, the fourth quarter estimated payments are due, and so we'll see if we're going to continue that trend. Now, Mr. Chairman, before I moved on, I was going to talk a few minutes, just sort of setting Craig up on federal tax reform from a overall perspective, but I thought I would stop there just to see if there was any particular questions from the committee on the revenue projections and where we stand.
Okay, any member have any question? Basically, your conclusion is we're going to stay the course with our current projections. That's where you're all at now?
Yes, sir.
Right.
That is where we are right now. Yes, sir.
Okay, okay. Okay, if you want to share some comments about that.
Just quickly, I think this is such a significant federal reform of taxes. Just point out a few things. It's the most substantial federal tax legislation since 1986. I did go back and review what happened in '86. And I'm sure Craig's going to talk a little bit more about it. We did have a windfall in the first year. The General Assembly decided at that time to share some of that back with our citizens, because remember, if we're getting a windfall, our citizens are paying more. And some of these provisions could end up, if they were only enacted specifically, would end up getting a federal tax break but paying more in Virginia tax. So went back and looked at '86. That's what we did, and then chose to make policy changes going forward. In that, I did look at what it did on our economy. I talked a little about that earlier. It was stimulative, but I remembered we were building up our Navy to a 300-ship program. The federal government was still growing. That's not necessarily the case today here in Virginia. But certain provisions, such as the rate and bracket changes, have very little impact to us, the actual computation of the tax. But many of the provisions have a significant impact. And overall, it is probably, without any change, it is a positive to us in terms of our revenue collections. And that continues to grow in the outgoing year as we go into further years. Now, we generally rely on the Joint Committee on Taxation to look at our estimates. But we think this is significantly complicated because of the interaction between the federal provisions and some that don't impact us, that we don't believe that approach alone would be sufficient in answering the questions you will have on what is the impact. So what we're going to do, and Craig will go through more of the detail, is work with Chainbridge Consulting, which is a consulting firm that has history in looking at tax reform, working with them to take a look at the income tax model that looks at the impact of federal taxes on Virginia. It will use the same model, the stacking order that the JCT would use to estimate the federal changes, but we believe will be a third-party review of looking at this. And it will estimate the impact of Virginia law changes compared on the new law. We don't believe we're going to have a great handle on that during this session. And the reason I say that is for twofold. I know there's many considerations about reforming our state laws. Without understanding these changes, it's going to be difficult for us to assess future changes. Now, as I said, there are various provisions in this law, and Craig will go through them in detail. Some don't have a whole lot of impact. Some have significant impact. And they're both individual and their business. And remember, the individual sunset in 6 years, where the business impact is long-term. So that's another thing that we have to consider. Now, I won't go through all of them, but if you look at some of the major positive, when I say positive, I mean revenue generation for the Commonwealth, the limitation on losses for taxpayers. In other words, now you have to take your losses prospectively instead of going back. That's a significant impact and could be significant monies to us from our taxpayers. The increase in the federal standard deduction, which is one of the most questions that we're getting now, has a significant impact to our taxpayers. In fact, the average deduction in Virginia for, not including our state taxes because they're not deductible, obviously, is $30,000. But the median is $15,000 or $16,000. It's in that right between $15,000 and $16,000. So the brackets for federal now are up to $24,000. If you're married, it's to be $6,000 here. In Virginia, without any changes, if you're around $20,000 in deductions, you'll have a calculation to make because we're a conformity state. If you take the standard deduction, the chances are you may have a larger tax bill in Virginia for just that one provision. And I want to point out I'm only using this as an example. There's a lot of interplay because there's limitations on deductions too. So that's the importance of us getting this right. And that's why I point that out, because we may end up because of a conformity state without changes, inadvertently taxing the offset to the federal. A couple of other positive impacts to us that get a lot of attention, they're not as significant as the state and local deduction, the cap for state and local taxes, the so-called SALT deduction. That will actually hit different areas of our state and different high-income filers differently than others. I mean, if we only had, if we said, what's the impact on an average filer, that's something we could give to you more quickly. But try to determine what it is in all the brackets and what the right policy is what's going to take us a lot more time, and that goes by region also, depending on where those property taxes are higher. Mortgage interest rate deduction, same thing. Not a significant revenue impact, but certainly an impact to our taxpayers. There are some negative. Yes, sir.
Excuse me.
Yes.
Senator Norman has a question.
Senator Norman.
Knowing your accounting background, Mr. Secretary, I'm kind of curious, do you think that there would be an adverse fiscal impact on Virginia if we continued to allow the deduction for home equity lines of credit on the Virginia return, the home equity lines of credit, and also that there wasn't that cap of 10,000 or whatever it is on the aggregation of real estate taxes and mortgage interest?
I don't have the specific details, so I don't know the actual number. I do think it would be a chilling effect on some home sales and the ability. Right now, it's $100,000 you can take on the home equity line, and I do think if you were talking to a bank that makes those type of loans, that they would think would be an impact. So without having the specifics, then certainly it would be an impact, because I know a lot of people, you can't take it on cars, you can't take it on other personal things. They use that line to offset that. So I would think from its individual taxpayer, there are many that would think it would be a negative. As far as a revenue collection, I don't think it would be significant.
Mr. Chairman.
Senator Norman?
Yeah, my focus was not on the individual taxpayer, because I happen to be one of those
Yes.
that operates off home equity lines of credit for a variety of things, but I'm concerned about, from a revenue collection standpoint, the Commonwealth of Virginia, whether we could continue to allow it without a significant adverse impact on the collection.
It would not be as significant as the other issues, Mr. Chairman. Would not be.
All right, thank you.
That's some of the individuals, and Craig's going to get to those in detail. But of course, on the businesses, there are some negative impacts from the business. That is the allowing accelerated depreciation expense, and it does allow some businesses now simplifying it from the standpoint of allowing them to be on the cash basis instead of the accrual basis. But there's some positives for businesses also, and back to Senator Norman's question, the change in interest deduction on the business, now it has to be capitalized, much like depreciation, and therefore limits their write-off. That could be a significant impact from a business perspective, but not from an individual perspective. And it also has similar net operating loss deduction rules like individuals. They must take them forward instead of going back. I go through all this, and Craig's going to go through in detail just to point out the complexities of what's going to be involved in getting this right, not only on a revenue calculation, but for us giving guidance to you in terms of policy changes that would be appropriate. With that, Mr. Chairman, that'll conclude my presentation, unless there's any other questions of me, and Craig will get into the details of this in much more specific.
Okay, maybe a question or comment here.
Yes, sir.
Are you monitoring the next target date for sequestration if they don't come forward? Where are we at with that?
Yes, sir. That's sometime in the spring. I don't know the specific date going out, but that's what I was concerned about with the shutdown, whether that is impacted in any way. But we are monitoring that. Of course, we have some waivers in terms of our defense industry in Hampton Roads, particularly Newport News Shipbuilding, I know. But in terms of the overall, a big area, is ship repair, and I think that's a big problem in Hampton Roads. Because of the sequester, there are many of those shipyards that would not have the normal type of repair that would be happening under a normal budget. So, yes, sir, I'll get the specific date. I know they pushed it back. I just can't remember off the top of my head to sometime in the spring.
Okay. The other thought I had is you've got your consultant working on the implications of federal tax reform, and particularly with the decision on increasing the standard deduction at the federal level and then us having a lower established rate here, which would give us more revenue. I think we're going to have to look, as you would agree, I think, the total picture, because the federal government also, not having any money and creating a larger deficit, they're going to be rolling back and pushing more responsibility on the states. An example like the CHIP program, even if they extend it, they are lowering the enhanced match, which is costing us more money. So I guess it's complicated, but we're going to have to look at what they're serving up on the expenditure side as well.
Yes, sir. Again, one of the reasons for caution, and that typically is what happens, as you know, that they continue the program, but ask the states to continue to pay more of that particular program.
Right. Well, Mr. Secretary, we obviously will miss Rick Brown, but we're very fortunate to have someone with your background to step into that position right now, and we look forward to working with you.
Thank you, Mr. Chairman. Look forward to working with you. Thank you.
Thank you. Okay. All right, Staff Commissioner, there you are behind the thing there. Craig, good to have you here today.
And I'll be brief. I was going to cover the first few slides, but Aubrey did a really good job doing that, so I appreciate that. We put this together to answer a lot of the questions that we've received so far, and you know, this is the tax bill that passed last month at the federal level is going to have a big impact on us because we're a conformity state. And conformity is good in a lot of ways. We start with the federal adjusted gross income as our starting point, and changes are made below that line as we go forward with taxpayers go forward with the tax computation. So it helps them with the income determination, and it helps us administer the tax code. And what was done at the federal level really won't have much of an impact on federal adjusted gross income. There were some minor provisions, but things that happen above the line really weren't impacted. As you know, we've been a fixed conformity state since 2002. There was a conformity bill submitted that set conformity as of December 1st, 2017, so decisions could be made outside of what happened on December 22nd at the federal level in terms of the filing season. Aubrey mentioned we were asked when was the last time this happened. It was really, the most significant was 30 years ago, the 1986 Federal Tax Reform Act. You can see on slide 4 what was done then. It was intended at the federal level to be revenue neutral. They consolidated individual brackets from 15 to 4, decreased some rates, raised the bottom rate, dealt with the individual standard deduction, the personal exemption, and the earned income tax credit, and did some changes for the business community. At the end of the day, they forecasted in 1986 that it would result in a windfall to Virginia ranging over a 3-year period from 173 million to 253 million. And the response at the time, legislation was submitted to the 1987 session that made a number of changes, and most were significant changes at the time, and many are still in place or only slightly modified. One was they increased the threshold for the top income tax bracket from $12,000 to $17,000. They increased and that was done over a 4-year period. They increased the personal exemption over a 2-year period. Same with the standard deduction. They increased that over a 2-year period, and increased the filing threshold for both single and married, and made some changes to the accelerated depreciation modifications under the accelerated cost recovery statute in place at the time. There were also some funds established in the budget to deal with ebbs and flows or miscalculations of the revenue impact to protect the budget. And as Aubrey mentioned, this is a significant act. Many provisions don't have a Virginia impact, but many, particularly below the line, dealing with personal exemptions and itemization and standard deductions do. We have been working with our consultant to develop a comprehensive model to use both our state tax data and our federal tax data that we get from the IRS per return to be able to answer some of the questions that you were asking Secretary Lane in detail and with as much accuracy as we can provide. But the thing that really threw us, usually there's changes that are one-offs that we could estimate using the Joint Committee on Taxation, but because of all the interaction between these major provisions and the stacking effect that they entailed, that we decided, as they did in '87, to get a consultant to help us do this. Aubrey mentioned the firm. The CEO had, in his prior life, worked for the Joint Committee on Taxation. They have experience building these models for other states. They're going to put it together using our state and federal data so they can model the impact of the interactions and the stacking effects, and how, once this is done, we can say if there are other changes that Virginia would like to make, we can use the best revenue available given the impact of the federal tax reform on Virginia to provide you with. Aubrey also went through a lot of the major provisions. Kristen's going to go through those. She and her staff have gone through the 1,000-page bill. We're very familiar with it and can deal with any questions you might have.
Thank you, Commissioner. Commissioner Burns, I think Senator Norman has a question for you before
Yes,
we get to
sir.
Christian.
Mr. Commissioner, I don't know whether to direct the question to you or to someone else, but just following up on the question that I asked Secretary Lane, would there be any significant revenue collection impact if Virginia continued to allow the interest deduction on home equity lines of credit and that there was not a cap on mortgage interest and real estate taxes?
I suspect there would be. I can't tell you the magnitude or the direction, but certainly over the year, unless changes are made to conforming or deconforming, there probably would be. I don't know the magnitude.
Thank you.
Okay. Thank you, Commissioner Burns, for being with us here today. And Christian, we look forward to hearing you.
Thank you, Mr. Chairman. I'm Kristen Collins from the Department of Taxation. Secretary Lane did touch on most of these provisions, so I'm going to go through this fairly quickly, but there are more materials in your presentation. And if you have questions as they go along and you would like me to slow down, just let me know.
So you read the whole bill?
Did, yes.
Okay.
And we read actually every version of the bill, the House version, the Senate version, and the conference report. So we've had a busy 2017. It was fun bedtime reading, right? So this chart here shows the major provisions that have a Virginia impact, and those are the ones I'm going to focus on, the ones that Secretary Lane focused on. The left side of the chart shows you the major individual provisions. The right side is the major business provisions. For each one, there's a plus if we think it would have a positive revenue impact on Virginia, and a minus if we think it would be negative. And they're generally listed in the order we think they would have in terms of magnitude. So we don't really know what the numbers are, like Craig said. That's part of what our consultants helping us do is they are actually part of the issue is our individual income tax model is just state data. So we don't have the detailed federal data in our model to figure out what the changes would be on the Virginia return. And they are actually going through loading all 3.9 million individual income tax returns in Virginia into this model, and for each individual figuring out what the changes would be and then aggregating it. So once they're finished with our work, we'll have a really good answer to your question, Senator Norman. We just don't really have that level of detail right now. So the biggest provision at the federal level, and like Secretary Lane said, there's a lot of interaction between the standard deduction and itemized deductions. I mean, it's really going to depend. If Virginia conforms to all the changes, the number will be significantly different. And if we can deconform from certain provisions, there could be impact on the other provisions as well. Because on the Virginia return, you're required to claim the standard deduction if you claim that on your federal return and itemize if you itemize on your federal return. There will be a positive Virginia revenue impact from this change. You can see at the bottom there's a chart showing you what the Virginia standard deduction currently is, what the federal deduction was in 2017, and what it is under the new law. So Virginia's was already about half of what the federal deduction is, and the federal deduction has doubled. So that just gives you a good idea of where we stand on that. The state and local tax deduction, that's been probably the biggest one that's been in the media. I know there was the prepayment issue that you all have probably seen in the media. Beginning in 2018, the deduction's capped at $10,000. On the Virginia return, we're not as highly impacted, so this provision may be a little bit smaller than it is at the federal level because we don't allow taxpayers to claim a deduction for their individual taxes that are paid, just their personal and real property taxes. So many individuals tried to prepay in 2017 the 2018 property taxes that were due. There was actually a case in the Fourth Circuit prior to all this happening, and then the IRS more recently came out with an announcement also explaining that policy, that if the locality hasn't yet assessed the taxes, then they can't be claimed on that year's return even if you pay them. So that's been an issue. So some of the taxpayers who prepaid, if the tax had actually been assessed, if they'd received a bill in the mail, they will be able to claim it on their 17 returns, but the other taxpayers will not be able to do that. The mortgage interest deduction that Senator Norman was asking about, so there's really two pieces to this. Right now, there's a $1 million, or prior to 2018, there was a $1 million cap on home mortgage debt, the amount of interest that could be claimed on that debt. The limitation is reduced to $750,000. There's a grandfathering provision, so this one probably won't have a big impact in the initial years. Any homes that were purchased prior to December 15th aren't affected by this, and refinances generally aren't going to be affected either, as long as the amount of the debt is the same or less than what it was in 2017. And the second piece is the home equity debt. That piece is not grandfathered, and so beginning in 2018, taxpayers will not be able to claim a deduction for the interest on that debt. The medical expenses deduction is one, most of these provisions are actually effective for taxable year 2018. As Secretary Lane said, most of them are set to expire on the individual side after a 6-year period. The medical expenses deduction is actually effective for taxable year 2017 and 2018 only. So this has a slightly earlier impact. And what this provision does is says that that it reduces the floor on itemized deduction for medical expenses that can be claimed. So right now, taxpayers can only claim a deduction for any expenses that exceed 10% of their adjusted gross income. This would reduce that floor to 7.5%. And there's a chart you can see at the bottom of this slide that shows the changes over time. Prior to 2013, the floor was 7.5%. Then it went up to 10% for those under age 65 for a 3-year period. For taxpayers who are age 65 and over, it remained at 7.5%, but that was set to go back to 10% in 2017. This bill keeps that at 7.5% for them and also reduces it for everybody else. There's an overall limitation on itemized deductions for individuals known as the PEAS limitation. This is repealed effective for 2018. There's an example as to how this limitation applies. I'm not going to go into it, but if anyone has any questions about it, I'm happy to answer them. There's a limitation on losses for non-corporate taxpayers, so any active business losses. Currently, taxpayers can generally claim those losses against their non-business losses. So if they have income from a business and other income, they can offset their other income with their business losses. Under this provision, any losses in excess of $250,000 or $500,000 for a joint return cannot be claimed against non-business income, but they can be carried forward like a net operating loss. And there's an example on this slide of how that works as well. The interest deduction, beginning in 2018, the deduction's limited to 30% of the business's adjusted income. So this essentially allows a less of a deduction in the earlier years, and taxpayers can carry it forward and continue claiming it in future years. NOLs are a big one on the business side. Effective beginning of taxable year 2018, the carryback is generally disallowed. For most NOLs, currently businesses can carry them back for 2 years and forward 20 years. This eliminates the 2-year carryback for most losses, but allows taxpayers to carry them forward indefinitely instead of over a 20-year period. But it does also limit them to 80% of taxable income. So right now you can claim an NOL up to the full extent of your income. This reduces that. There's a provision related to the amortization of research expenses. So right now, taxpayers can generally immediately deduct the amount of their research expenses, or they can capitalize them over a 5-year period. And there's a typo on this slide. I apologize for that. It's actually not effective till 2022. So that first bullet should say prior to taxable year 2022. Beginning in 2022, the immediate deduction is no longer allowed, and they can capitalize them over 5 years or 15 years for certain foreign expenditures. So out of the business provisions in this presentation are all effective for 2018 except for this particular one. The legislation also repeals the domestic production activities deduction for certain qualified activities for producing things within the United States. There's a little bit of history on this slide as to this deduction. It was increased back in 2010 from a 6% deduction to a 9% deduction. Virginia partially deconformed for a couple of years, and then in 2012, we decided to conform to the full deduction. So this will be repealed effective in 2018. There's a rule with like-kind exchanges. Generally, if you have an exchange of similar property, you do not have to recognize the gain. Effective for taxable year 2018, gain or loss from like-kind exchanges of personal property or intangible property are now recognized. The old rules still apply to real property that's not held primarily for sale. And this just applies to property that you hold in a trade or business or for investment purposes. It doesn't apply to anything you hold personally. There's some, and I'm not going to get into these because they're fairly detailed, but there are some limitation or repeals to certain employer fringe benefit deductions that are listed here. This one is a negative impact, so positive impact to taxpayers. This increases the threshold on what we call Section 179 expensing. That's the Internal Revenue Code section that it's under. But essentially, this is a deduction for small businesses. It allows them to immediately expense certain property instead of depreciating it over a period of time. Prior to 2018, they could expense up to $500,000. Now the limitation is $1 million. And there's a reduction, a phase out in the amount of the deduction. Under prior law, that was $2 million. Now it's $2.5 million. So taxpayers will be able to claim a little bit more of a deduction there. And Secretary Lane mentioned this one. I'm not going to get into it too much, but essentially there's some changes to the small business accounting rules that essentially allow more taxpayers to benefit from using the cash method of accounting. So those are the big provisions. I know I went through that fairly quickly. If anyone has any questions, I'm happy to answer them now or later if there are follow-up questions later on after this meeting. In conclusion, here's a couple of the things that we're planning to do going forward, a few things to consider going forward. We're continuing to work with our consultant on analyzing the revenue impact. We don't actually have numbers from them yet, but once we get them, we plan on, they're working on the individual model right now. Once they finish that up, we'll look at it, review it, and make sure, if we have any questions, we agree with their approach. And then they'll start working on the business provisions as well. We expect revenue estimates from them in the next couple of weeks. It's a little bit uncertain. It's been an interesting exercise for us because it's something that nobody has done in our state for about 30 years. And certain provisions will impact Virginia regardless of whether the General Assembly elects to conform to all of these provisions. That's something to keep in mind. There are the behavioral changes. The standard and itemized deduction issue is an important one to be aware of. And unless we change our law and the way it works, taxpayers will switch over from itemizing to the standard deduction regardless of what, certain taxpayers will, regardless of what Virginia does. And because of the interplay between all the provisions, we would recommend that any structural changes to the Virginia law, so changes to rates or brackets or standard deductions or personal exemptions, consider the way that the federal changes would impact those because, if we did an impact statement on something last year, it will likely change this year depending on what the General Assembly decides to do with the federal tax changes. So that's all I have. If there are any questions, I'm happy to answer them.
Okay, does anyone have questions for Kristen or Commissioner Burns? Okay, we certainly appreciate the information you've provided here, Commissioner Burns, Kristen. It's very helpful. We know we'll be working on this with you. Thank you. Okay, that concludes our presentations. We have a fairly ambitious agenda this morning, but I think we can go ahead now with some member bills and that will be hopefully fairly routine that we can clear the docket. So, Senator Carrico, you want to be first up?
Didn't tell me how to lower my taxes on all that.
You were proficient at it.
Mr. Chairman, I'll start with the one that's just a very technical correction. Last year we passed the Washington County Amusement and Entertainment Tax Bill.
You're on Senate Bill 503?
503, I'm sorry.
Okay.
And this is a technical amendment that would just kind of clarify the language that give the appearance that the facility must have both entertainment and sports facility. And the bill fixes that to allow either or both.
Okay. It is a clarification. Historically, I've never been keen on admissions taxes, but I think I've supported these down in Wythe and Washington, just not James City County.
I hate admission.
Okay, there is a motion to report Senate Bill 503. Is there a second? Second. Any further discussion? Hearing none, clerk will open the roll.
Rolls over.
Record your votes, please.
Yeah, I'm okay with it. Oh, I'm sorry.
You can vote up there, right? All right, clerk, close the roll.
Ayes 14, no 0.
Ayes 14, no 0. The bill is reported, Senator Carrico.
Thank you, Mr. Chairman. Next bill will be Senate Bill 501.
501.
And this is dealing with adding Wythe County to that list of counties. And basically, Wythe County is building an arena and an agricultural center there off of exit 77. And there needs to be an amendment to this because it has listed that it's at least 3,000 persons. Their seating capacity is only going to be at most 2,500. So if we could just amend that to 2,000.
2,000. Lisa, do you have that?
Mr. Chairman, the amendment would be on line 15 after at least strike 3,000 and insert 2,000.
Okay, is there a second to that amendment? Okay, discussion? All those in favor say aye. Any opposed? All right, the amendment is adopted.
So this bill would just allow Wythe County to be able to implement that admission tax at the Expo Center that they're currently in construction of. They're about through phase 1, entering into phase 2, which would build the arena, and there's no other Expo Center close to them other than Kentucky, and it's at the interchanges of Interstate 77 and 81, and feel like it'll be a positive impact.
Is that where that shopping area was at over in there, that little village area?
It's just right next door to it.
Right,
yes.
okay.
Yep.
All right, thank you. Any further discussion? Anyone here to speak for or opposed to this measure? What's the pleasure of the committee? Motion properly supported to report Senate Bill 501 as amended. Any further discussion? Hearing none, clerk open the roll, please. Record your votes. Clerk close the roll.
Ayes 15, no 0.
Ayes 15, no 0. The bill as amended is reported.
Last, Mr. Chairman, for a couple of years, we've been addressing localities' ability to have a source of revenue other than the constantly raising the property taxes. I had several counties this year approach me about a cigarette tax. One of the reasons is along I-81, there's a lot of not rest areas, but truck stops. And there's a lot of purchases of tobacco products along that I-81 corridor, I-77 corridor. And a lot of the counties that have those truck stops in the area felt like this would be an opportunity for them to be able to collect taxes and not have to put that burden back on the property owner. It come at the request of several of those counties. I had a lengthy discussion with them about just carving out just one county and it being special legislation as to whether we included all the counties in it. And the other part was I felt like, I had some people who didn't want to just target one product. So with that conversation came the idea that we give every county in Virginia that right now Arlington and Alexandria, I think, are the only two counties that are listed in that that's able to charge that tax. But this would basically give every county in Virginia the ability to put it on a referendum for the people to vote on as to whether they would accept a tax in that county for the cigarette tax up to 5%. And this would cover every county in Virginia. It wouldn't specify one out. And it would allow them to bring that vote to the people to decide.
Okay. Sir Carrico, you have anyone here to speak for this?
Yeah, I think there's a couple of people here that would like to speak to the bill.
Okay.
Mr. Chairman, members of the committee, Rob Catron. We're working with several counties in Southwest Virginia who strongly support this measure. Like the senator said, it would go to a referendum, let the voters decide, and we strongly support the bill. Thank you.
Others?
Good morning, Mr. Chairman and members of the committee. I'm John Jones, representing the Sheriff's Association. We're here supporting this bill because it'll provide needed revenue for core services for these counties, especially public safety. Thank you.
All right. Thank you, John. Becca?
Good morning again, Mr. Chairman and members. Katie Boyle with the Virginia Association of Counties, and we also support this bill. We view this as progress towards revenue diversification. Thank you.
Okay. Anyone here to speak in opposition?
Mr. Chairman, Reggie Jones representing Altria. Not here to speak in opposition at this point to this bill, but I would ask, we think there are going to be a number of bills involving tobacco taxation during this session, and we would ask that you kind of put those all together perhaps and look at them in a broader sense as to how we should handle all of them. And we certainly would be glad to work with Senator Carrico, who I know has been a leader on this issue for the counties for quite some time, and see how maybe it should be handled in a broader context with everything else.
Maybe we start a prep. Okay, others to speak? What's the pleasure of the committee? Senator Norman?
Mr. Chairman, with all due respect, I appreciate what my colleague's trying to do, but I would respectfully move that we carry the bill over until 2018.
Is there a second to that? Okay. With that motion on the table, I would share, Senator Carrico, that I was tempted to put in something myself this year.
I beat you to it.
And even the state level. But we have a hodgepodge right now, as you're well aware, working on this issue of we are the lowest state tax in the nation again, but we also have localities that are significantly higher, and that together. So I believe it is an issue that lends itself to us carrying it over, not as diverting it, but to put it in the appropriate place this session so that we can come back next year, hopefully, with a recommendation that will be equitable for the localities that you're putting forward for VACO, primarily the counties, and that we could do something. And so that's my comment. Other members have a comment, or you want to respond to that?
Well, Mr. Chairman, I understand, and I know there's a lot of different ideas out there, and I'm happy to work with them. This came at the request of several counties in my area, and if we want to carry it over or put a delayed enactment until next year, so we can work something out, I'm fine.
All right. The motion is to carry over. Further discussion? Hearing none, clerk would open the roll, please. Okay, record your votes. The motion is to carry over. Clerk, close the roll.
Ayes 14, noes 1.
Ayes 14, noes 1. The bill is carried over. Thank you, Senator Carrico. Senator Chapin, Senator Cosgrove. Senator Dance, you've got a bill. Oh, I'm sorry. Senator Dance, we do have a non-member out here in the audience now that hadn't been with us before. Senator Chapin, Senate Bill 376.
Yes, good morning, Mr. Chairman. This bill is being carried on behalf of a charitable group called Children of America Finding Hope. They are located in Buchanan County, Virginia, which is part of my district. So our state tax return allows you to designate for a donation to a charity in the return. And some years ago, there was a bill, House Bill 1486, that basically limited the number of charitable organizations to 25 that could be considered for this. And there was another criteria that allowed or required that there be at least $10,000 in donations annually for 3 consecutive years, or they came off the list. Of course, the rest of the story is Children of America Finding Hope failed to appreciate this, was unaware of that criteria, and they were taken off the list. They were bumped off the list. So the reason for the bill is to allow this good and charitable organization to get back on the list, and to do that, the way the bill's crafted, it takes away the 3-year criteria.
Okay. Does this bill need any amendments currently?
Mr. Chairman, there's 2 technical amendments that would be necessary. On line 19, after B, insert for taxable years beginning on and after January 1, 2018. And at the beginning of line 20, strike continue to appear and insert be listed.
Okay. There's a motion. Is there a second to those amendments, technical? Motion properly supported. All those in favor say aye. Any opposed? All right, those amendments are adopted. Did you have anyone here to speak to that?
I do not.
Okay. And is there anyone here to speak in opposition to this? Senator Chafin, this is one that I actually struggled with a bit as we were previewing these bills because we have a fairly long list and we've got criteria. Yeah, I guess I would be inclined maybe to support it. But it is an aberration. I don't want to start something here that sets a precedent, I guess, as we manage this list. Any members of the committee have any observation or comments on this? Hearing none, what's the pleasure of the committee? Okay, motion to report. Is it second? Any further discussion? Hearing none, clerk will open the roll for Senate Bill 376 as amended. Record your votes. Okay, clerk, close the roll.
Ayes 14, no 0.
Ayes 14, no 0. Senate Bill 376 as amended is reported. Thank you, Senator
Mr.
Chafin.
Chairman and members.
You bet. All right, Senator Dance.
Mr. Chair, Senate Bill 249 is a revenue bill. This bill, if passed, would generate tax dollars for the state without raising any tax rates. This bill comes in consultation with small business. Virginia's motorcycle dealers lose an estimated $5 million in sales each year on ATVs, off-road motorcycles, and mopeds because Virginia residents buy from dealers in adjoining states to evade the Virginia sales tax, believe it or not. Currently, those classes of motor vehicles are taxed under the sales tax, whereas surrounding states impose a titling tax. So this bill makes a tax on the 3 classes of vehicles a motor vehicle titling tax too. This makes interstate tax reciprocity apply so that when a Virginia resident buys from an out-of-state dealer, the purchaser will be required to pay the tax to obtain a title. Since almost all higher-cost ATVs and motorcycles are financed, the selling dealer will collect the tax and send it to Virginia. Based on industry data regarding sales, the bill will result in a net increase in total revenues of $337,000 in fiscal year 2018, $364,000 in fiscal year 2019, without raising any tax rates. The bill would distribute the revenues from the motor vehicle sales and use tax on such vehicles in the same manner as the retail sales and use tax. This bill has the endorsement of Virginia Power Sports Dealers Association, and just as a reminder, you loved this bill last year. It reported out of the Senate 40-0. I hope you still love this bill, but there is one person represented from the Power Sports Dealers Association that would like to speak, and then I understand there's a friendly amendment from DMV.
Okay.
Okay.
We will hear your supporter.
Mr. Chairman, I'm Emily Franklin. I own and operate Ken Cycle Center right outside of Richmond. I'm president of the Power Sports Dealers Association of Virginia, and we are small businesses, and this bill would help us even the playing field for us.
Okay,
I'd be happy to answer any questions.
all right, thank you for being here today. Anyone else to speak to the bill? Anyone here opposed to the bill? Sir Stewart, this one you liked last year, wasn't it?
Move to report.
Well, we want to get we want an amendment. Do we need an amendment, Lisa?
I thought they said there was a friendly member, somebody from DMV, so they must be okay. They're okay.
They're okay?
Yep.
Move to report.
All right, okay, there's a motion, seconded report. I think it was that unreasonable House Finance Committee that messed with your bill last year, wasn't it?
Yes, it was.
Okay, okay. All right, we have a motion properly supported with no further discussion. Clerk, open the roll, please. Please record your votes. Clerk, close the roll. Ayes 15, no zero. Your bill is reported, Senator Dance.
Thank you, sir. I'll try it again over there.
Okay. I have a couple bills. I'll pass by those till we clear it. Senator Howell?
Thank you, Mr. Chairman. I have three bills this morning, and if I could just take them in numerical order. The
Okay,
first one.
Senate Bill 69 then?
Yes. This deals with the transient occupancy tax for Arlington County. Every other county, when they want their transient occupancy tax, it just sort of goes through very easily. Unfortunately, Arlington has a member of the House of Delegates that keeps putting sunset clauses on it. We're now up against that sunset clause, and all this does is remove it. I think it's important for this committee to know how successful Arlington is in using the funds from the transient occupancy tax. It generates over $1 million, all of which goes into promotion of tourism. And the benefit to the state has been shown to be about $4.5 million. So it's my hope that you will report this good bill and help our money flow up here as well as Arlington. I believe somebody wants to speak to it.
Anyone here to speak for the bill briefly? I believe this one's in pretty good shape.
Yes, thank you, Mr. Chairman. Scott McGarry, I'm here as a past chairman of the Chamber of Commerce of Arlington. I first spoke in favor of this bill in 1990, and every so often we've had to come back to renew it. The Chamber asked for this as a means to promote tourism and economic development in the county. It has served the county and the Commonwealth well, and I hope it'll be your pleasure to report the bill. Thank you.
Okay. Anyone here? Yes.
Mr. Chairman, members of the committee, I'm Bisma Ahmed representing the Arlington Chamber of Commerce, and this is our top legislative priority. Thank you.
Okay, very good. Thank you for coming down this morning. Okay, we have the bill in front of us. It's very familiar to us. What's the pleasure of the committee?
I move to be reported. Second.
Motion properly supported to report the bill. That is Senate Bill 69. Clerk, open the roll. Please record your votes. Clerk, close the roll.
Ayes 15, no zero.
Ayes 15, no zero. The bill is reported. Senator Howell?
Thank you. The next bill is Senate Bill 228, which deals with deferred real estate taxes. We authorize localities to defer real estate taxes for people, elderly people, disabled people, people who were having trouble paying their property taxes, their real estate taxes. And we put in the code that it should be based on the sale of the property. Some people, unfortunately, have taken advantage of the situation and found different ways to sort of skirt the payment at the sale. So we're trying to nail this down. It causes a tremendous difficulty for the commissioners of revenue and treasurers to try and collect the deferred taxes when they're being sent through estates or gifts or to neighbors or whoever. And I do believe Alan Albert's here to speak to it.
Okay.
Mr. Chairman, I'll be brief. Alan Albert on behalf of the Treasurers Association. This is a legislative priority of the association. I'm not aware of any opposition to it. Frankly, what we're doing is fixing some incomplete drafting from 1971.
Okay.
So I think we could say that without insulting anybody here, even you and me.
Okay.
But I'd be glad to answer any questions or provide an example,
Okay.
but I think it's pretty straightforward.
Very good. Anyone here to speak in opposition to this bill? It appears to be that it's clarifying. What's the pleasure of the committee?
Move to report.
Is there a second? Motion properly supported to report Senate Bill 228. Any further discussion? Hearing none, clerk open the roll.
Votes open.
Okay, please record your votes. Clerk, please close the roll.
Ayes 15, no 0.
Ayes 15, no 0. Senate Bill 228 is reported.
Thank you. And the last one is Senate Bill 271. This deals with data breaches. As you might remember, last year we passed legislation requiring companies to report data breaches. It was estimated, if I remember correctly, that was going to save us about $10 million in fraudulent returns. The department, this is a department taxation bill, now thinks we should have tax preparers who are paid to prepare taxes to also be required to report these data breaches.
Okay.
And I think it's estimated to save $300,000.
Okay, well, that'll help. Lisa, did this require, if you had to rewrite this, do we have a substitute?
Yes, I'm sorry, there is a substitute.
Okay, all right, if we could distribute the substitute, please.
Move the substitute.
Is there a second? Motion properly supported to adopt the
Thank you, sir.
substitute for Senate Bill 271. All those in favor say aye.
Aye.
Any opposed? Okay, we have the substitute in front of us. Anything substantively different about the substitute? It just,
Not really, it addressed some concerns of some CPAs.
okay. All right, I might ask then, is there anyone here from the accounting profession that has anything to say against this, or, yes?
Mr. Chairman, members of the committee, Patrick Cushing on behalf of the Virginia Society of CPAs, just want to thank the department and the senator for working with us, and our concerns have been addressed. I think there may be one issue that we might have with that, but I need to see a copy of the substitute.
Okay. If you could,
Okay.
Mr. Chairman, Kristen Collins from the Department of Taxation, if I may. There was one thing that Patrick just caught while we were sitting here that would be a technical amendment to the substitute once you adopt it, if you all are okay with it on line 13, or should be and. Because really the intent is to if the taxpayer's identity and any other information is obtained, that was the intent. So that's a technical amendment.
would we replace both ors with and?
Just the first.
I'm sorry, just the first one.
The first one? Okay, someone want to offer that amendment? Motion properly supported to a technical amendment on line 13 to change the or after identity to and. All those in favor say aye. Aye. Any opposed? Okay. Is it?
So with that, Mr. Chairman, we have no position on the bill, and thank you very much.
Okay, thank you for working with them on that. And the Department of Taxation, you're good with it now? Okay. Anyone else here to speak in opposition to the bill or concerned with the bill? Hearing none, what's the pleasure of the committee?
Move to report.
Motion properly supported to report Senate Bill 271, amendment in nature of substitute with a technical amendment. Clerk, open the roll. Record your votes. Clerk, close the roll.
Ayes 15, no, 0.
Ayes
Thank you.
15, no zero. Senator Howe, your bill is reported. Senator McDougal, you want to try to change the budget cycle again?
Mr. Chairman, this is my valiant Don Quixote effort to try to put sense into our colleagues down the hall. Mr. Chairman,
Well,
Senate
good
Bill
luck with that.
404, I don't know if this is the 7th or 8th year that I've introduced it. I have yet to be invited to a House committee to present it to them. But, Mr. Chairman, as we've seen, and I think it's more poignant in a year where we have a gubernatorial transition. Right now with our budget, the outgoing governor presents a budget and is not in office for a single day where any portion of that budget has to be implemented. This would change that so that when a governor introduces the budget, at least their administration has to operate for some point in time under that budget. And Mr. Chairman, it also gives the advantage to the incoming governor of only having to worry about amendments to an existing budget while they get their team in place. This makes logical sense for the effective administration of our resources, takes the politics out of budgeting, and is good public policy.
Thank you, Senator McDougal. This is a bill, obviously, as was explained by Senator McDougal, that we've seen before, and I think pretty much universally accepted on the Senate side. Any further discussion?
Problem with this bill is it's good public policy.
Okay. What's the pleasure of the committee? Motion properly supported to report Senate Bill 404. Clerk, open the roll.
Roll is open.
Record your votes. Clerk, close the roll.
Ayes 15, no, 0.
Ayes 15, no zero. The bill is reported.
Thank you, Mr. Chairman.
Thank you. There are two remaining bills which are mine. Senator Newman, would you take the chair?
Sure. The last bills are Senate Bill 231 and 232. Senator Hanger?
Thank you, Mr. Chairman, members of the committee. Senate Bill 232, I'll go 231. Apologize, I'll keep them in order.
Can't even get it here.
Senate Bill 231, I'll speak to first, is our capital outlay plan. Many of you are familiar. A number of years ago, we decided to put in place basically a six-year plan so that we could queue up these projects that we are looking to at some point in the near future fund. And this is our version for this year. It's generally a document that does receive some attention during the session, maybe some amendments. But at this moment, this is the list that we have in front of us, and it does seem like we have some concurrence with the House this year that they will move the plan forward. If there are any questions on that, April, of course, is very intimately involved with this, Mr. Chairman.
So are there questions from the committee about the document? If not, are there those that are here to speak in favor of the bill? Anyone here to speak in opposition to the bill? Mr. Chairman, it doesn't look like we need any amendments, so it looks like it's ready to go if the committee so
It is ready to
inclined.
go, and obviously we're in a time frame where we're looking, at our obligations and our needs in the future with some limitations on our bonding capacity and where we want to be with that. But this is our list for the next 6 years that we have
Mr.
now.
Chairman, thank you very much. Is there a motion on the bill? There's a motion and a second that the bill be reported. The clerk will open the roll.
Roll is open.
Is it? Wait a minute.
I think I voted you here.
Oh,
Mr.
did you?
Chairman.
Oh, okay,
Yeah.
good.
Okay, clerk, close the roll.
Ayes 15, no, 0.
Ayes 15, no zero, and Senate Bill 231 is passed. Mr. Chairman? Senate Bill-
Thank you, Mr. Chairman. The next bill, Senate Bill 232, is a fairly small offering for a certain type of bonds, C bonds, which are revenue bonds for colleges and universities, but they do have the full faith and credit of the Commonwealth Pledge behind them. There are two items on this particular bond measure. One, construct residence housing at Norfolk State University for $10 million, and renovation of dormitories at the College of Women and Mary for another $11 million. So the total bond package here on the C bonds is $21 million. That's the extent of it.
Senator Saslaw.
Mr. Chairman, is that referendum?
No.
That's D, right? Is that D? That's referendum?
Right, these are revenue bonds
Okay.
for the university, but we're paid by dorm fees.
Okay.
Yeah.
Are there other committee members with questions?
No.
If not,
I'll move be reported.
okay, I'll just say, are there those in the audience who are here to speak in favor or in opposition to the bill? Hearing none, Senator Saslaw moves the bill be reported, and second, Senator Howe. All those in favor, the clerk will open the roll.
Roll is open.
Clerk will close the roll.
Ayes 15, no zero.
Ayes 15, no zero. The bill is reported. Mr. Chairman.
Thank you, Senator Newman, and with that, that clears our docket. If there's no further business, the committee will rise.